All right. Hello, everyone. I hope I'm audible enough. How's everyone doing? Welcome to Sesky Trades Day 2. This is day two. Basically, this is day two of our series. Yesterday, we spoke about market structure. Yesterday, we spoke about market structure and the importance of market structure and everything you need to know about market structure. All right. Yesterday was packed, and I believe anyone that tuned in would have gotten a thing or two to know or to learn about market structure. All right. So, what are we doing today? As you can see, today we're all about futures trading. All right. Just a minute. I'll get back. We're talking about futures trading today. And as you can see from the sc screen up there, futures trading, the architecture of risk. Right. Let me do something. We're going proper shortly. Once again, welcome to Sesky Trades. My name is Sesky, and this is day two. All right, let's get back to it. All right, so like I said, welcome to you all. This is Sesky Trades. We're going to be talking about futures trading today. All right. As you can see, this is basically from my laid out slide. This is a professional guide to building disciplined framework on LBank. Yeah, LBank is my platform of choice. So I love LBank, and you guys will love LBank too. So I think you should all um, get in on LBank. All right. The link will be pinned on the comment section. All right. So I would like to start by saying this. If futures trading scares you, it means you respect risk. You understand? It means you respect risk. And it's only right for futures trading to scare you. Well, I'm not trying to say make you run away totally, but if you're actually scared, if it fears you, it means you respect risk. And that is where risk management comes in and other things we need to do so that we can, make up. And other things we need to do to, what's the word now? Oh, sometimes English could be hard. All right, yeah. So if, like I said, the futures trading scares you, that means you respect risk. So today, I'll show you what futures trading actually is, and basically using simple maths, not hype. I'll just show you, and I'll also show you what it is using how to navigate it using the LBank platform and going to futures trading using the LBank platform. And also maybe a few touches here on TradingView. Yesterday we did a lot of TradingView, so today is going to be more of the platform of choice, LBank. All right, so like you can see from my slide, because from my slide I created, this is the professional guide to building the disciple framework on LBank. Professional futures trading is not defined by the pursuit of a singular high return. You understand? It's not defined by the pursuit of a singular high return event, but by the rigorous management of mathematical variables, execution, precision, and institutional growth mitigation. You understand? So basically, it's all about math. It's all about proper calculation. All right. So, futures trading, if you do your calculations right, if you do your maths right, you'll be in for profits. All right, so but before I go on, I want to say that this is strictly educational. This is not signals. This is not signals whatsoever. Just for education, just to teach you guys and show you my learning process and how I learn and how how I've learned futures trading. And also, I believe it's the same way you can learn too. Also another thing I need to say before I go on, I hope you guys don't mind the. I don't know if it's echoing, there's a background noise because you know how it is in Nigeria. We usually have some technical issue. If it doesn't have to do with network, sometimes it will have to do with a power supply. So I had to use a backup gen, which is making the sound you can hear in the background. So it's one of those things. So, but we must do what we have to do. We got to do what we got to do. All right, to make things move on. If not, we'll miss stagnant in life. So we have to find ways. So depending when the main power comes back, uh, the background noise might be, you know, I don't know if it's loud enough to disturb you guys, but the background noise will be there for now. And also, I don't know if you can hear the music in the background too, so I don't know. Maybe I should increase it later. I'll check it out later. All right. So as I said, this is strictly educational. We'll be dealing with small numbers only today, and we talk about risk because in future it's basically risk before reward. If you don't risk it, you won't get the rewards, all right? So the same thing they say about life. It's those that take the risks that are very successful. So you have to risk, to get your rewards. All right. So leverage doesn't increase skill, it only amplifies outcome. That's one thing you need to know about um, futures trading. Leverage doesn't increase skills. That's leverage because the futures trading is about leverage. You understand? You must use leverage in futures trading. So leverage doesn't increase skills. It only amplifies the outcome. All right? It amplifies the outcome. So from my screen here, I don't know whether I should increase the size. Maybe it's large enough for you guys to see. Excuse me. Let me try something. All right, so I might have to let me go back. I don't like it. So let's just stick with this instead. I believe everyone can see this. I believe everyone can see this. All right, so moving on. Just a minute. All right, so now let's go into the futures trading process. So now the next topic here is the foundational difference, betting on direction, not ownership. You know, once you open your any exchange you have, we have lots of exchange. But like I said, LBank is my exchange of choice. We always have the spot trading option and we have the futures trading option on LBank. There are other things you can do there, but basically most people go for either the spots or the futures. All right, so I'll explain briefly what sports trading is, and then we now focus on the futures trading, which is what we're here for today. All right, so you can see from what I put up here, on my little slide I created, spot trading, you, you buy an asset, you own the assets. That's what spot trading is about. You're basically buying the assets and you're owning the assets. You understand? Example, you buy one BTC, you hold one BTC in your wallet. Goal. The main goal is asset accumulation. So I'm sure many people, this is where many people fall. You understand? This is what everybody does. Just is what the general public does the most. You understand? So they basically buy an asset and they keep it. It's asset accumulation. They buy anything, use Ethereum, Bitcoin, Solana, whatever it is, whatever cryptocurrency you are buying on the spot, just to hold, you are accumulating assets. That is basically sports trading. You understand? Like you can see from the example there, you buy an asset and you hold an asset. Okay, you buy an asset and you hold an asset. All right. So now, moving on to futures trading. Now, for futures trading, you trade a contract based on an asset's price price movements. You understand? You trade a contract based on an asset's price price movement. For example, you open a long contract on BTC. You understand? You open a long. When I say you open a long contract, that means you are predicting that okay, BTC is gonna rise. I think I said this in 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 the market structure class yesterday. You predicting that BTC is gonna rise. You understand? So you put in a buy order. All right. You trade a contract based on an asset price movement. For example, you open a long contract on BTC and you profit if the price rises. You understand? So placing a long or opening a long contract means you are buying. You understand? It means you're buying. That's one thing you should understand to my beginners out there. It means you are buying. All right. Or you open a short contract and you profit if the BTC currency falls. So placing a short means you are selling. When you hear these are terms that you need to understand. When you hear buy, it means when you hear long, it means buy. When you hear short, it means sell. As you are predicting that the price of BTC is going to fall. So you make a profit if your prediction comes correct. All right, so that is what basically this means. That is the exam. That is future trading. You are trading the contract based on an asset's price movement. So the goal here basically is capital efficiency and speculation on direction. So like I said before it even came up here, leverage doesn't increase skill, it only amplifies outcomes. I repeat that again. Leverage that you see in futures trading doesn't increase skill, it only amplifies outcomes. A 1% market move with a 10x leverage results in a 10% change to your capital, profit, or loss. You understand? For instance, though I'll see explain it again in the next few slides. Okay, let me not just go there now. So let's take it a step by step thing. But from here, you can just see leverage doesn't increase skill, it only amplifies outcomes. A 1% market move with 10x leverage results in a 10% change in your capital, profit, or loss. All right, so you take note of that. Take note. I'll explain better later. So let's go to the next slide. Excuse me. Excuse me. I don't know why I'm yawning. Probably it's because I'm either hungry or sleepy. All right, so the first protocol, the, uh, I tend to speak fast. So when I try to pronounce the words, I kind of miss it sometimes. So I'm just trying to speak as slow as possible so that you guys can hear me properly and understand. All right, so I'm trying to speak as slow as possible. All right, so the first protocol, secure and segregate your capital. So this is basically on how to navigate LBank. Don't worry, we'll get to LBank. I already opened the LBank page here. You can see we are LBank now. So we'll come back here. I'll show you what to do. Show you what to do around here. And by the way, join LBank. There's some perks and some bonuses you'll get. I'll explain that to you guys. Maybe probably in another video. I'm going to do some short videos explaining things in a very, very short and simple way so that you guys can understand. And I'll post them to the channel. So you guys stick around. You can stick around and wait for that. All right. So the first place to secure and segregate your capital. Create your and secure your account. Register at lbank.com to avoid phishing immediately. Yeah. So like I said, I have a link. So I'll post the link in my I'll pin the link, I'll post it in the comment section so you guys can use the link to register. Make sure you use that one to get specific bonuses. Because if you don't use that link, you just go straight, you won't get those bonuses. It's provided for you so you can get some specific bonuses. Alright, so register at lbank.com to avoid phishing immediately and immediately enable two-factor authentication via security settings. This is non-negotiable step. Do you understand? So it's a process. Like I said, I'll do a video showing everyone how to, register and do their 2FAs, verify, get their account verified, and just basically navigate the LBank properly. Okay. So, fund your account, deposit crypto directly, or purchase via supported methods. All right. So you can deposit crypto to your LBank account from various ways. You can either do on chain or off chain basically. So you can just send it directly from maybe one of your other crypto wallets to your LBank. They'll provide you your wallet address. Once you register, you get a wallet address to different cryptocurrency pairs, cryptocurrency, I mean. All right. So, or you can purchase via supported method wherever you are. For me, I'm right here in Africa, Nigeria. All right, so you can either use banks, cards, bank transfer, I mean, or P2P. P2P works very well here in Nigeria. P2P works very well. or you have if you have a vendor, you can always use your vendor. Just provide him with your link and you go register. You can use cards. I think banks now work in Nigeria, but it was some exchanges they still don't work. So, but P2P works very, very well. All right. So once you do this, the assets basically arrives in the spot wallet. It arrives in your spot wallet first. The funds to your futures wallet. Navigates to wallet, transfer amount to desired amount of USDT from your spot wallet to your USDT and futures wallet or futures account. This action is internal. Exclude firewall between investments and trading capital. Okay, okay, so you do that. Then segregating funds into futures wallet is your first act of professional risk management. Do you understand? So you need to separate these funds, segregate them. Understand? So take the ones you need to use for futures and separate it from the ones that are keeping at spot. All right. It isolates speculative capital from your core holdings. I believe that's understandable. It basically just isolates what you're using for futures from your main holdings. You understand? From the ones that you're just keeping just for assets, accumulation. So it's separates them, and whatever happens in your futures accounts doesn't, you know, affect what's in your spot. All right. So, like I said, it's the first professional risk management. The very, very first professional risk management. Okay. The very first professional risk management. Okay, moving on. All right. So, oh, I don't know why. I'm always yawning. It's nature. I've been up trying to do some things. All right. So before I now, imagine architecture. Let me just say something about the basis of futures. All right. So, um, in sports, basically, whatever you buy, you own it. You own BCT, you buy BCT, and BTC. You own Ethereum. You buy Ethereum and you own it. It's yours in sports. It's your asset. All right. In sports, it's your asset. All right. So you basically, own that one. You keep it. But in future trades, you don't own it. You don't own anything. You are basically trading price movements. You are trading price movements. You don't own anything. You're trading price movements. So if price goes up, you make money. If price comes down, you make money. You make profits from that. But also you can make losses if your positions are very, very wrong. You make your losses faster. You make profits faster and you also make losses faster. So it's vice versa, it's the same thing. You understand? So basically futures isn't evil. It's just misused leverage that is evil. If you don't use leverage properly. You understand? Misuse leverage is evil. Futures isn't evil. All right. So get that in your score. Get to know that. All right. So now, once you navigate to your LBank account, we have what we call the margin architecture, a a foundational choice between bounded and total risk. Foundational choice between bounded and total risk. All right. So bounded risk. Isolated margin. We have two types of margin architecture basically. We have an isolated margin and a cross margin. Isolated margin, cross margin. I'm sure a lot of maybe the few of the experienced ones to know this. We have isolated margin and we have the cross margin. Okay, so um, like I said, bounded risk. The isolated margin basically allocates a fixed predetermined amount of capital to a specific trade. I take that again. It allocates a fixed. See, I don't know if you can see. Let me use the tool here. Oh, you can see where this plus is. This is where I am. See, it allocates a fixed predetermined amount of the capital to a specific trade. It's a lock safe. If the trade fails, only the contents of that safe are at risk. The rest of the funds are untouched. So, for instance, if you go into a trade with that particular amount, isolated margin just basically locks that particular amount that you use for that specific trade. Yes, and it locks the amount you use for that specific trade. So, whatever happens in the trade, profits or losses, it doesn't affect your other funds in your futures account. You understand? The first thing we said, move from your sports to your futures. Now, from your futures now, there is isolated margin and cross margin that you use. All right, so the isolated locks in the amount for a specific trade. You understand? If you take if it's $10 you're using, you want to use for a particular trade. If you're using $10 per trade, it's only that $10 that will be used throughout it for the time period of that trade. You understand? Whether you go on profits or you go on losses. You understand? So if you're going on losses, that means if you get liquidated, it's only that $10 that will be liquidated out of the market. I will explain these things to those of you that don't understand. All right. So, like I said, it's best for precision bounded rules and testing new strategies. You understand? The professional standard. So, beginners should go on isolated margin. You understand? If you're just starting out, I advise you use the isolated margin. Use the isolated margin. Okay? So, before we go on cross margin, guys, sorry that I'm behind. All right, so let's go on. Sorry about that. Just hold on a little bit of power issues. Just on that.